Perfect.
Okay, welcome everyone to our webinar today. I've adopted ASC 842, now what? We're just letting everyone file in. We have a very good crowd today. What we'll do to start is we'll pass it over to Nicole from RGP, and then we'll come back and introduce ourselves and get started. All right, over to Nicole.
Excellent. Thank you so much, Isaac. Welcome, everyone. I'm just going to get started with some brief housekeeping. We are recording today's program, and the recording will be posted to the Trullion website within a couple of days of the program. Please submit any questions or comments that you have at any time via Q&A and/or chat, as there'll be time for Q&A during the program as well as at the end. 1 CPE credit is available today. To be eligible, please participate for the duration of the webcast, as well as responding to the 3 polling questions launched during the session. We also invite you to provide your feedback on a survey that will appear on your screen as you log out today. Lastly, CPE certificates for today's program will be emailed out to all eligible participants within a couple of weeks of the program. So that's it for housekeeping. Thanks again for joining. I'll hand it over to Isaac to begin the program. Isaac?
All right, thanks, Nicole. Let's get started. Just a couple introductions here. I'll introduce myself. My name is Isaac. I'm one of the co-founders here at Trullion. Originally grew up in Texas. I've got a background in financial transformation and strategy, working everything from fast-growing startups to publicly traded technology companies, and now working here at Trullion. We're a financial automation software company, and obviously work closely with our partners like Tim.
Thanks, Isaac. Good afternoon, everybody. My name is Tim Tickle. I'm a vice president for finance transformation at RGP. My background, I'm a CPA by trade, spent about 15 years in public accounting, then transitioned to the corporate world, spent another 13 years as an executive for a Fortune 100 company. And for the last 5 years, I've been working in the national practice at RGP, helping clients transition to the lease accounting standards, specifically ASC 842, IFRS 16, GASB 87, helping clients understand not only the process of adopting, but more importantly, how to get the most out of it and how to actually realize some value out of the exercise. So excited to have the conversation today. Back to you, Isaac.
All right, me too. So a little bit about what we're talking today. We'll start with a market update, just about what's going on. We'll characterize and paint a picture of what Tim and I and many others really experienced, which was this avalanche, where you had this ASC 842 lease accounting regulation coming in right after RevRec, and a lot of public companies and many private companies had to adopt very quickly and in a brief period of time, with a lot of other things on their plate. After that, we'll talk about some lessons learned and alternative approaches for the future and some of the innovation that's come out of that avalanche. And we'll talk a little bit about the future and how companies can leverage tech and managed services to move forward. But first, we're going to start with a poll. So at this point, we will launch the poll. And so we're going to click launch. So please pay attention, and you'll see a single choice answer on your screen about now.
Pretty straightforward question. Where are you at in the adoption process? Have you already adopted, either in the process of it or in the initial processes, or already adopted and looking for CPE? And obviously not applicable if none of those apply to you. We will give everybody about 5 more seconds to respond, counting down from 5, 4, 3, 2, 1. And Nicole, if you can share the results.
Okay, we had everyone participate, which is great. I will share results here. And let's just look really quick. As we can see, about half of the audience have adopted, and another half are in the initial phases, and a few are well on their way. All right. So Tim, let's talk about the market and how the world has changed. Not just in the past few months, but really in the past few years. I think that one of the biggest thing that's kind of the elephant in the room is always the pandemic and COVID-19. This thing started, and we've really never been in the clear, I would say, even with this new revival of the Delta variant, which has led to a lot of virtual work and a lot of CFOs and controllers really starting to look at, what is the impact or the potential of moving things into more collaborative workflows, knowing that there's going to be a more distributed environment, right, with the virtual work. Now, Tim, what have you seen with companies as we move towards this virtual work environment?
I think you're right. I think, obviously with many accounting standards, the private companies kind of look towards the experience the public companies have as a manner of gauging kind of how the process is going to work for them. With the pandemic in this situation, nobody really got to, actually benefit from the public transition, because as soon as they did, the world changed, and people had to completely evolve the way that they were managing this. And so there really was a lot of, ingenuity being displayed within the workforce, and figuring out how we could go through complex, transformative accounting standard changes, while at the same time pivoting to this concept of virtual work, and being able to manage not only the adoption process, but more importantly, the post-adoption process. So how do they actually make that work? And so we've seen a lot of different flexible, situations where people are continuing to evolve how they are addressing with this, and more importantly, how do they engage with the rest of their business to understand, when things change. And so I think it continues to evolve. I think that what we're seeing is that many people are a lot more comfortable in the virtual space, and much more comfortable performing more complex activities in that space than they were, say, 2 years ago or a year and a half ago. And so with that, people are looking at the innovation with more of an eye towards how it can help them in the current form. I think there was a lot of trepidation about, significantly changing how they were looking and doing things while COVID was going on. But now that people realize that that things aren't going to change or go back to normal anytime soon, they're having to basically become comfortable with the concept of remote work and less physical control over processes, et cetera, and leveraging technology to do this in a virtual form. So I think that for me, that's one of the things that it's been actually very good for us, because I think, businesses are looking outside the box and trying to figure out what's going to work for them, as opposed to just trying to take a cookie cutter approach and saying, okay, this is how everybody's doing it, so this is how we're going to do it. And so they are really, looking very uniquely at their particular situation to determine how best to not only comply or adopt the standard, but more importantly, how to progress after the adoption and build processes that work in a virtual form.
Yeah, I mean, it's interesting as we think about the virtual work combined with the new regulations. It was a bit of a perfect storm. I remember several years ago working on significant ASC 606 exercises, and all the new challenges that came, and then we had lease accounting. Many of my colleagues had CECL and some of the new standards, and there just seems to be a general trend towards more transparency and moving more and more onto the balance sheet and additional regulations, which from our perspective is really good, because you can get more visibility into financial reporting. But at the same time, it's created challenges because it's additional work. Now, a lot of our clients and our colleagues, we're in the tech world now, and a lot of them are very keen to use technology and adopt technology. The challenge is sometimes finding the time or even getting the approval to go forward with these projects, right? A lot of people are pro technology, pro automation, pro new models, but this COVID environment has created a catalyst for a lot of not just CFOs to push down, but a lot of leaders, senior accounting managers, directors of reporting to go up and say, look, we have this new standard. We need to leverage a different model for this, working with a partner or a combination of working with a partner and a new technology workflow, right? Especially companies that are in a decentralized model, whether it's in a few different cities in the US or across the world. So this was Tim, this seemed like a little bit of a perfect storm. And then at the same time, you have all these new operating models. I won't even get into crypto, right, and Bitcoin and all of the new things we're seeing on the horizon. But just for us as a software company, you're moving from old on-prem and software and maintenance license models to recurring revenue and all types of new models. So all of these things are happening while business models are trying to evolve and move towards new revenue models and much more data-driven structures.
And I think one thing that's pretty indicative of the finance world is we've obviously over time we've been somewhat slow to adopt technology, at least in the finance space. I think the rest of the business has been very much pro technology, but the old school accounting, close the books and doing that in a very routine and fashionable way has been the way forever. And so now, with the advent of the COVID and the virtual work methodology, people are not only struggling to keep people in the roles they have, but when you add work like the lease standard, where it's actually incremental more work that they have to do, then how are they managing the net increase in work with a workforce that's either the same or shrinking? And so that it's almost forcing their hand to look at technology as a way to drive and to meet the demands of the new standard.
Absolutely. So let's, Tim, let's set the stage a little bit. Let's go back in our time machine to 2017, 2018. In fact, we could even go further back into 2010, right? And almost over 10 years ago, probably, when the original ASC 842 papers were drafted, right? And this standard was proposed. Then we're sitting there in 2017 and 2018 on the cusp of a 1/1/19 adoption deadline, and everyone's thinking about this in different ways. I remember, I think it was Microsoft, right? One of the first companies that adopted, and everyone was waiting to see their disclosures in their reports. They had done it a few years early. They were an early adopter, and we thought there was going to be a bunch of early adopters, but then I think less than 5% of the market adopted early. So you had virtually all of the market in that year thinking about how to adopt. And from my perspective, what I saw in working with probably over 100 clients is different approaches, right? Some people, they adopted internally. Some people force fitted into a small team. Some people had a broader PM team that they tried to work with. And then a lot of people actually leverage partners, right? So they worked with, whether it was implementation partnerships or managed service partnerships, they kind of extended their team to get this adoption on track. Tim, thinking back, what were you seeing at this time?
I think back, in the 2018 timeframe, first of all, I think many of the publics underestimated the amount of effort and the amount of change that was involved with the standard. And so many of them waited till late in the year to get started. And I think what we saw was that avalanche, like you said, not only of work that needed to be done, but also the avalanche on the software providers that were providing the ASC 842 accounting. The backlog was creating a significant amount of challenge. Even with the partners that were out there, like RGP, that were out assisting people, there was just a bandwidth issue. And so we saw a lot of organizations struggle to get adopted by 1/1. Many of them missed the date and ended up having to retrospectively adopt and restate prior periods because of just the amount of time. And so that was just the overall backlog and the challenge with getting the amount of work done to adopt. But I think secondarily to that, I think where the market struggled was the foresight to think of this as a sustained compliance initiative. This is not just a race to a finish line. This is actually a race to a starting line. And at that point, cross-functionally within their organizations, they had to align business processes and roles and responsibilities to ensure that, when things change within their leasing portfolio, that it was identified and timely communicated to the right people. And what we found is that, with the lack of foresight, there was a lack of process. And so, 6 months, 9 months after adoption, organizations were struggling to produce financial statements because their database of leases had become stale. And so that sustained compliance became, and still in my eyes becomes the most important component of the adoption process is, not only how can I get to that day one entry, but how can I ensure that I can produce accurate financial statements a year, 2 years, 3 years down the road. And that's more around aligning your cross-functional teams within procurement and real estate and IT and treasury, et cetera, so that they all know what their new roles and responsibilities are. And absent that, then you saw the failures that we did, where organizations had to re-implement, for the lack of a better term, because their information had become stale. And so, obviously there was a lot of time and energy spent there. I think there was a little bit of, what I consider to be, I don't know if it would be lack of foresight, but a lack of creativity and understanding that, with this exercise, we were now going to be gathering tons and tons of information about our leasing portfolio and our business, that if we didn't leverage that information to actually provide ROI back to the organization, we were leaving money on the table. Whether it was, understanding and getting ourselves out of onerous end of term, maybe evergreen leases or month-to-month leases because we failed to turn assets in, whether it's not understanding our competitive advantage of understanding what all our lease rates are and being able to negotiate better leasing rates. If those are not things that we haven't added on to the adoption process, then we are missing out on ways to actually provide ROI back to the business as part of a compliance exercise. We saw this a lot with the SOX advent back in 2003, where a lot of organizations posed a very, you looked at it very compliance oriented. I just got to go out there and check the box to get the SOX sign off, when in reality, we were gathering so much information about our business that if we didn't leverage that, we were leaving time and money on the table. And this is another good example of that, where we spend a lot of money to become compliant and then we stop. And in reality, we should be looking at how do we leverage that information to actually provide value back and ROI.
Yeah, I think that's a really good point. With the ongoing compliance. For us at Trullion, we come from a software perspective, right? So, we are very, very excited when people are extending their team and leveraging partners. At the same time, we're very curious about where is all that data going. And so what we saw in 2017, 2018 were a lot of different choices in terms of tools. So I think a lot of people stuck with Excel, right? There's nothing wrong with Excel for a small portfolio. I'll be honest, I think it's manageable, right? Let's say under 10 leases. A lot of people, forced more than 10 leases in Excel, let's say, which I actually think is manageable to create an initial right of use asset. But to your point, Tim, about the ongoing compliance, ASC 842 has all these nuances around modifications and updates and disclosures and, remeasurements and things like that make Excel very perhaps doable on day one, but not on day two. From a software perspective, there were softwares that were purpose built for lease standard. There were other softwares that had a history of real estate or equipment related to leases and were able to help companies comply. Where we saw an interesting opportunity at Trullion was to be able to automate a lot of the contract extraction and review within the financial workflow, right? So there's all types of choices, whether it's Excel or day one tools or other lease tools. And we saw a wide spectrum of choices. Now, ultimately, the market struggled, right? And this became very, very clear, even in the headlines. I remember a Wall Street Journal article that talked about the initial delay. Sorry, let me back up. ASC 842, just for everyone's records, was delayed twice, 2 years. Remember, this has been discussed for over a decade. And by the time it came into effect for the private companies, the broader market, it was delayed 2 times for 2 years. The first delay, the second delay was COVID, right? The first delay was because of the challenges related to public companies. And in the Wall Street Journal article, Russ Golden with the FAS at the time said that they were disappointed that software companies weren't ready for the new standard, meaning they were the regulators in this case were coming out publicly and saying software companies were not ready. Now that was a watershed moment for me as a tech entrepreneur, because when FASB, right, a regulator is pointing to the technology companies saying that they weren't ready for a standard that was, proposed 10 years ago, there seems to be a disconnect between the innovation and the market and what's available to corporate controllers and CFOs. And so that's why we, when we started to talk to people like Tim and other partners in terms of thinking about how we could create more innovative business models in this space. Tim, when you heard about that delay, what were you thinking going into the private company deadline?
Well, I think the FASB, I think that there was some challenges from the software companies, but I think more importantly, the organizations didn't truly understand what they were embarking on. And I think that, many people took the guise that this was just an accounting standard change and, it required us to do some calculations and then create a journal entry on day one and we're good to go. When in reality, this is a finance transformation or event that's going to impact the entire organization. And so a lot of organizations spent their time and money looking for softwares that checked one box, which was, does it do 842 accounting? And they didn't necessarily look for the other boxes. Like, how does it help me manage the day 2 process? How does it reduce the amount of manual effort in day 2 in making sure that I sustain compliance? And so they were completely not looking at that component of the standard. And that's, to me, that was probably one of the main reasons why the first delay occurred, was because the public organization struggled maintaining compliance. And so they stepped back and said, look, let's give them 2 years to figure this out so that they maybe take the amount of time and energy that they should to not only address the accounting aspect of the standard, but more importantly, to get all of their business processes aligned so that they can continually report under this standard going forward, and that their internal processes and roles and responsibilities are defined and understood so that things don't sneak through the cracks. And at the end of the day, I think that's probably the best benefit of the delay, is our ability to get out into market and to explain that to our customers, that yes, this is an accounting standard change, but the impotence of the standard is more transformational. It requires your business, your organization, to behave differently going forward across the organization, not just in finance and accounting. And so with that understood, how do we go about making that process the most efficient and most automated as possible using the technology that's out there today? And that's where I think we become very valuable to our clients as partners in being able to provide best practices, solutions that we've seen that have greatly improved the ability of organizations to sustain compliance over time. And whether that's, the AI on the front end and being able to leverage that to reduce the amount of manual time it takes to, extract data information into our lease accounting platform, to leveraging, the AI for embedded leases. I think that's a huge potential win for the organizations that, rather than trying to turn our procurement and real estate organizations, or perhaps even legal organizations, into technical accountants, we can leverage an AI tool that will scan the documents for potential language that might be indicative of an embedded lease, and then forward those to finance and accounting so they can look at them. So these are ways where we can, partner with technology to ultimately provide a truly optimized day two process for our clients, and one that is sustainable over time. Obviously, if we have unlimited budget, we can go out and hire an army of people to manage this, but nobody has that. And so we have to figure out the best ways to manage this. And some of our clients, Isaac, they have basically decided that they don't want to manage it. And so they've actually sought out partners like RGP to actually be their managed service partner. So basically running their platform for them, doing their lease accounting for them, managing all of the journal entries and the disclosures and the change, and making sure that the system is up to date. These are ways that organizations have leveraged partnerships and technology to reduce the amount of effort of sustained compliance.
Yeah, it's a really good point. When I think about these, you're bringing to life, you're characterizing some of the different people that in organizations we interacted along the way. When you use an example of, leveraging AI for embedded leases, right? That falls into kind of the second category, maybe a little bit of the third here, where you're thinking about someone who wants a really efficient process. The company that you talked about, which just had a day one tool to get the calculations, is just focused on, the first category, which is I've got to be compliant. The initial point I thought, which was interesting, Tim, you talked about centralizing the lease data and thinking about it as a cost savings or cost synergies exercise, like actually trying to get strategic value out of the exercise, which definitely connects to a lot of the initiatives that are happening right now in the virtual workforce. It's kind of a weird coincidence that everyone's talking about the future of hybrid work. At the same time, we're centralizing our lease data through an accounting compliance exercise. So when we think of these different types of organizations, there's a lot of different ways to approach that, right? They could just want to be compliant, which is great. Want to be up to date with modifications, remeasurements, and various changes. And on the other end, they may just want an efficient process, and that could just be about optimizing the internal resources. So, I mean, Tim, how do you characterize? You've seen so many of the people in the I've got to be compliant category, the I need an efficient process category. What are you seeing from them? What are the challenges they face on day two?
Well, I think that first and foremost, it's a challenge in discussing this with clients to get them to understand that all three of these need to be a concern. If I come to the table thinking I've only got to be compliant, then I'm missing out on the potential, advantages of having an efficient process, leveraging technology, and then even more importantly, strategically, how do I take this information that I have? I mean, we've worked with clients that have very decentralized purchasing, and maybe they've got forklifts being leased all throughout the world. We now have visibility into that, and we can see where we're overpaying on forklift leases at one location versus another one for the exact same asset. Those are examples of actually taking the information that we have and learning something from it, and then being able to leverage that through maybe even centralizing our purchasing power and leasing through programs versus this decentralized model of acquiring assets. There's lots of different ways to take the information and to become and to make value out of that. So I guess first and foremost, it's getting everybody to understand that this is a multifaceted standard. And obviously everybody's focused on the compliance to begin with, but beyond that, with with the technology that's out there in the 842 space, I would say that the accounting is probably the least of my concerns anymore. I think that most of the platforms do a great job of producing 842. But my next question is, what else can I get from them? Because when you take that component out of it and say, okay, they all produce the accounting, now I'm down to, okay, what additional value can I obtain from that platform that ultimately is going to enable me to flip the script from, a compliance exercise to a value-driven exercise where, yeah, I'm going through this exercise to meet this new accounting standard, but I'm actually going to reduce costs to the organization. I'm actually going to return value to my organization as part of this. And even using that to pay for part of the adoption effort, right? And so it's more around just educating what is actually at play here with our clients, not either those that haven't adopted yet or even those that have adopted. Coming back to the table and saying, okay, now that we've gotten through this initial compliance hurdle, what can we do next? How can we actually take what we've got and make it more efficient, have it operate better, use the data that we have to actually, enter into more economical or better business decisions with the organization. So at any given time, we could be anywhere on that spectrum, Isaac. But I think I would be short-sighted to say that anybody needs to focus on any of them. I think that they are all very important in approaching this standard change, because again, at the end of the day, it's transformation. And it's not just compliance that we're dealing with. And all three of these come into play when you're talking about transformation.
Yeah, I think that's great. And just before we go on to the CPE poll, a lot of the clients that we work with, we don't even expect them to have a clear idea of what they want, right? It's not fair. You always start with this being a compliance exercise. It's like the hierarchy of needs, right? You just start with the initial task at hand. The cool thing, with Trullion and the technology is by using the technology, you at least have the data centralized. So we're coming out with new features and new analytics and new reports every day. And a lot of it is inspired by our customers, right? To think of a co-location data center company that started working with us and bringing in, tons of different locations into the platform and breaking out all the components of those agreements and what they're paying. A heavy part of their model is related to their leased assets in these data centers. And so, part of the first step, I think, is, to get to that strategic value is really making a commitment to centralizing the data in a modern tool and a modern process. And then once it's there, these are software companies. These are leading, RGP is a leading managed services company. The ideas and the innovation will come along the way. With that, we're going to do the next CPE poll. So I'll just go to the next slide, and we are going to run the poll right now. As you can see, the second question. Oh, there we go. I'm getting my launch. Okay, the next question is up. You have a little less than a minute to answer. All right, you have 10 seconds. Okay, and we'll end the poll. All right. We have about half the customers are using a platform, some of them Trullion, some of them other platforms. So we're always, curious to see if there's opportunities to help optimize the process. And actually, more than 15% are using a spreadsheet, and a handful of companies are researching platforms right now. So all across the board, and thank you for responding. Okay. Next, we think about those different personas and people in that step in the process. And we'll just sprinkle in here, Tim, a little of ways to think more strategically. So again, we set up the problems, the different types of mindsets, right? Seeking compliance or being strategic about innovation. And as we think about, okay, well, what does that actually mean to seek compliance or to seek automation? Tim, I'm curious, what is it like, what does it feel like to just focus on compliance? What does that mean? Who am I if I'm just seeking that aspect of this project?
Well, I think typically when we're speaking with clients that have very small portfolios, that leasing is just a small component of their business, whether it be as an organization they've chosen to purchase a lot of their assets, et cetera, or maybe they don't have a lot of locations. They're, in that guys, they're strictly just looking for that initial balance sheet true up, and then the ongoing journal entries that are associated with it. And I think, the more, this is a smaller group than I think that I initially thought would be in this space, just simply because I think the market's changing. And I think that everybody, no matter how small they are, they're looking for growth, right? And they're looking for opportunities to grow their business. And so beyond compliance, you need to be strategic as you grow. You may have 10 leases to start off with. And then, through a couple of acquisitions, next thing you know, you're sitting on 100 leases. And now that initial compliance exercise has now become an extremely manual exercise to maintain the journal entries, et cetera. And so, even if I'm in that small bucket that I think that I'm only seeking for compliance, I need to have a little bit of thought forward and think about the idea that, what if I do grow? What if there is that acquisition that doubles my portfolio? Do I, when is the appropriate time to address that? A lot of the clients that we talk with that have plans for growth like that, our suggestion is to go ahead and let's plan for that now. It's easier to build out processes and automation when the volume isn't there. And then when the volume materializes, you're already ready. And so there are values in being a little bit, looking forward as it relates to where your business is not only going to be in a year, but more importantly, in 5 years from now. So, there are going to be those that are very comfortable where they're at and have no plans with growth. And I think that there's definitely a number of platforms out there that are going to provide them that compliance answer. But at the end of the day, I think that number is smaller than most people would expect.
Yeah, no, we tend to agree. I guess maybe it's because they're not reaching out to a software company. They're thinking of forcing it into a basic tool or a spreadsheet. Look, about close to half of the requests we get for demos or for our product itself comes from a CFO or a digital transformation leader in an organization, forwarding along a webinar they saw of ours or an advertisement or something like that, a CFO pushing this and saying, look, we need some AI and some automation in the organization. So we end up with a lot of clients who are really just seeking that automation, to invest in automation. Now, a lot of them don't even fully understand the equation of the lease accounting standard yet. Right? How much incremental work I'm going to have initially, how much incremental work I'm going to have ongoing. But they understand that there is a new wave of technology and services models that can include things like AI. So, they come to us because it's an initiative. It might even be a box to check from the CFO perspective. Now, then we go and talk to the CFOs. And we say, well, look, hey, we're going to save you, X number of hours for the AI, but the compliance exercise is much bigger than just the AI contract reading that Trullion is doing. And the CFO says, I know, but I want us to start thinking in this type of way. I want us to have the mentality. I want us to be comfortable with these modern tools, with having a document, right? An unstructured document tagged or read within a financial workflow. So part of it is just a broader initiative to bring on automation. And then once you think about the automation, then you could, it can get really interesting when you talk about innovation. For, Tim, for us, when we think about innovation in this space, you could have a lease or really any contract that's being negotiated, right? Maybe it's 30, 60, 90 days to signature. And because the contract is loaded into a financial tool, whether it's a lease process or a revenue process or a purchasing process, because that contract where the ink is wet is connected to a financial workflow, you might be able to see a real-time balance sheet or a real-time view of how you can quantify that extra option that you've negotiated, or a renewal date that's very specific to that. So there's a lot of innovation that can be done just by bringing in some of these legacy processes into the workflow. Tim, I mean, you talked about AI to manage embedded leases. Is there anything else top of mind for you when you think about automation and even innovation?
Well, I think, that embedded lease piece is a huge component, because I think a lot of the organizations that we have spoken with, it's one thing to kind of go through and do that embedded lease review as part of the adoption, but, how do they build that into a process going forward? In theory, every contract that we sign could potentially be an embedded lease. So how do I put gatekeepers out there to ensure that, when there is an asset involved, that someone from finance is looking at that? And so that's where I think that AI can be an extreme benefit, because then I don't have to go out and train, a bunch of non-accountants on an accounting concept. And we don't have to leverage them to be that initial gatekeeper. We can build it into an automated flow. So I think that's huge there. I think additionally, a lot of organizations are asking us, in that space of embedded leases, are there ways that we can structure the contract so that we don't get into an embedded lease? And so in that example that you gave, where the ink is still wet, and maybe, we do that preliminary run through the software to look and see what the impact is, we could potentially, get out of embedded leases by understanding the language before we sign the contract. So that would be another potential area where businesses can leverage that to potentially get themselves out of onerous administrative, functions associated with contracts. I think when you look downstream, I think the value that having your data in one space becomes evident when you start seeing, especially in decentralized organizations where purchasing is being done in a number of different places, and those leases are being procured throughout the United States or the world. You now become visible to the rates that you're being charged for the same assets, and ultimately what you're being overcharged, right? And then being able to take that information and leverage it. So maybe I've got 50 forklifts across 25 vendors. What if I were to bucket all those forklifts up to one and take it to an RFP for a few vendors, and I could significantly reduce my cost of that asset by leveraging that information that's now in the software. Also leveraging a lot of the automation that these softwares bring out as it relates to end of term management. So, a lot of times we're dealing with businesses that, have a significant amount of evergreen leases where, maybe they've signed a 3-year lease, but, for the last 2 years, they've been paying for it month to month. And that's simply because they didn't know about it. They weren't aware that these onerous transactions were out there. Now that we've increased the visibility, we can put in some controls around that and ensure that when we get to end of term, we're either negotiating or returning the asset, and making sure that we try to limit our exposure to these month-to-month leases, et cetera. And so, all of that pulled together, each one of those exercises right there in a day 2 world or a sustained compliance world is adding value beyond just the accounting entries, right? So you are now taking this compliance exercise and you are now, using it to reduce cost or to become more efficient. And at the end of the day, when we can start returning value to the organization through real ROI, as part of the day 2 process, then this doesn't become a sunk cost. This doesn't become a cost of compliance. It actually becomes an exercise in automation and efficiency and innovation, where we can begin to leverage the data and in ways that we never thought that we could before to provide value back. And if we're not doing that as an organization, we're leaving money on the table. And yeah, maybe if I haven't adopted yet, I don't have visibility. But, what I look for in that is, having the foresight to think that, beyond compliance, I want to look for a platform that's going to give me the opportunities that we've talked about here today. That's going to give me ways to automate. That's going to provide workflow and approval and visibility and transparency to the things that I need in order to provide that additional value back. So that at the end of the day, if I am paying an X amount of money for a software, that software is generating cost savings to me. And, and if I'm not thinking it that way, then I think, we're being somewhat short-sighted with the fact that this is a standard that's going to be there forever. And so we either address it now at the foresight, or we wait 5 years from now when we spent a ton of money and perhaps become extremely dysfunctional as an organization, and then we try and fix it. And that may involve, technology changes, process changes, and a lot of significant effort by the organization that, planning up front would have greatly reduced.
Yeah, it's an interesting point, Tim. The idea, everyone's kind of got these embedded leases that keep them up at night, right? The idea of finding an embedded lease. Well, you bring up a good point. What if we could get ahead of it, right? What if we can make sure we're not getting into any embedded leases or even writing the leases ourselves in the first place? So when I think about, this process, this ASC 842 process, zooming out, I mean, look, at Trullion, we can work with a client that has 30 employees and 10 leases, right? But we also have clients that are in 30 different countries, right? One of the biggest phone companies in the world is managing their compliance with Trullion in over 30 countries. But in any organization, this is a microcosm of what it looks like, right? You have a lot of different parties. You're reading the PDFs, and in some cases, Excel, or a flat file database extract from a vehicle or an equipment system. There is a lengthy procedure taken to extract it, put it into Excel or a basic tool, and then run the reports. We at Trullion also think about the auditors, right? And we think about the broader goal and vision to bring more financial visibility and transparency into the process. And so we think about the auditors and even some of the consultants that you're working with to recreate that process step by step. And so when we look at that, it's a siloed, disjointed process. And to Tim's point, and Tim, I don't know if you want to add anything here, there is opportunities to start to centralize this function.
Well, I think that, Isaac, if you had looked at this, back in 2018, most people would have characterized this as basically an accountant and an audit process, right? That, thinking at it purely from a compliance perspective. And what we see now is that there are so many different inputs and functional areas of the business that are impacted by this, that you now have to think cross-functionally of the impact of your organization. And at the end of the day, be able to, comfortably substantiate the audit at the end of the year, right? And so understanding not only the intricacies of the standard itself, but how do we functionalize or operationalize the 842 process within our organization to be efficient, automated, and provide value back to the organization while still meeting that audit requirement. And I think that over time we've evolved, the markets evolved, the technology evolved, businesses have become more, willing to look at creativity in this process, whether it be out of necessity because they're failing, or because they are truly hearing what's being said out in the market and saying that, look, this is an opportunity to really, really take advantage of an accounting standard to actually improve your business. And so, that's the exciting part to me. We're also seeing a number of different businesses that, for one reason or another, do not find value in the 842 process being managed internally. And I truly understand that there are some businesses that there isn't a value to investing in headcount, technical expertise, platforms, et cetera. And we have a number of clients that have come to RGP and looked for our managed service, or even our lease accounting as a service model, where there really isn't even a platform to buy. It's more of a service that's being provided, where they don't have to necessarily invest in all of the infrastructure and all of the technology. They can simply leverage a partner for that. So I think it's important to understand the complexity of the standard and to understand, what is your business reason for the model that you're selecting, right? Is this something that I want to, build out internally, build out the technical expertise, leverage automation to the nth degree, take advantage of the information I have in the software to reduce costs, or vice versa? Is it something that is not pivotal to my business and I need to, look at what's the most cost efficient way for my organization to comply? There's varying degrees there. And I think that every organization is different as to how they evaluate that. But at the end of the day, there is value to seeing what's out there, to understanding how it can help your business, and ultimately you're making the decision that's right for their business. And in some cases that may be an Excel tool, Isaac, as much as you and I both don't like that answer, but I think that you're right. There are some circumstances where that's the viable tool. But I think at the end of the day, for the most part, when people start thinking about longevity and sustaining compliance, then they start seeing the value of technology and platforms, and more importantly, how do I streamline the cross-functional transformation that's involved in this, and making sure that 6 months from now I'm not falling down on my face, or a year from now and I have to go through this process again. So I think that, as I love the conversation, and I think that have been around during the Sarbanes-Oxley days, Isaac. I think that's a classic example where organizations went in with a compliance-based mindset and came out of it with a, oh my gosh, look at all the information I've learned, let's improve my business. And understanding that this is exactly the same exercise. We're learning, we're bringing to the forefront a ton of information about our business that maybe we weren't aware of, and now taking advantage of what we know.
Awesome, Tim. I mean, I got to be honest, I love Excel, so it's hard for me to say, what the options are. But look, I mean, we're running up on the clock here. We want to get to the final poll question and make sure everyone gets in their time. As Tim was saying, and I think one of the reasons we at Trullion got connected with RGP is because we had the demand for our software, and our software is there to ensure that you can get compliant and automate and get a lot of leverage out of it with all the data you centralize. But at the same time, our clients were still struggling with the technical accounting questions and the broader processes within their organization. We don't have, we're not a services company, right? We're a software company. We do the best we can to make sure that you have a smooth process within the workflow. But when you go from that siloed process, which we saw before, to this new process, which we see now with Trullion, because you have a lot of the source data tagged and connected within the document or the Excel, or even the source system, things are happening in real time. And what that means is whether it's your auditor, right? So we have clients with their auditor who's going into our system, whether that's a partner like an RGP who's an extension of your team. Everything is documented within a workflow, within a financial workflow. So you can really almost get superpowers by connecting the dots within the audit trail. Tim, I'm just going to jump to the last poll question while we have everyone, and then we'll jump into any Q&A. Okay, CPE poll on the screen right now. We're going to be launching the poll in 1 second, and we're going. All right. Okay, it's crawling up. Got about halfway. Almost there. We'll count down to 10. From 10, 9, 4, 3, 2, 1. Wonderful. So, we had a little more than half saying that there's internal resources, but then a lot of people saying we will need help, right? So, obviously there's a lot of talk about that today and a lot of opportunity beyond that. Tim, I think we're done. Was there any questions on the line or anything perhaps that we didn't get to that might be missing for myself or Tim? Wonderful.
That were submitted there, Isaac.
Great. Tim, any closing thoughts or housekeeping on the RGP end?
No, I really appreciate everybody taking the time today to join us for this conversation. I know it was probably maybe a little bit different than what you've seen in the space for 842. I know that a lot of the webinars out there are more technical and kind of how you do things, but yeah, I think it's important a lot of times to step back and think about what we're doing and why we're doing it before we actually engage in taking it on. I think that we can become somewhat siloed in our approach to adopting the standard, that we lose sight of some of these bigger picture items. And so, I think it's a good opportunity for us to have this conversation. And I do think that, the technology, and then Trullion's a great case where the technology is evolving to actually improve the lives of accountants, which I'm all for. And I think that, when you're going through this exercise, try to think not only about the initial compliance, but more importantly, where you're going to be 3 years, 5 years from now. What are your growth opportunities? What do you think the business is going to look like? And then use that to guide yourself as you go through this process. Because again, this is something that you're going to have to sustain compliance with forever, or until they change it again. So thanks.
Wonderful. Yeah, thank you very much. And thanks, Tim. Always great chatting with you. Have a great rest of the day and afternoon, everyone.